Hello guys, well until you guys see all these numbers in the Cape Coral real estate market, there's a lot of stuff going on. I know that's what you guys came over here for, so hey, let's start the report. Hello everyone, this is Manuel Vargasrealtor down here in the Cape Coral, Florida area. If this is the first time on my channel, hey, hit that thumbs up and subscribe. I have a lot of info right now to give you. So now we're gonna be talking about the Cape Coral real estate market, where we at, where we're heading. At the end of the video, I'm gonna give you my little quick recap of what I think is gonna happen. But as of today, my previous video, I was talking about that prices were stabilizing. I think we probably hit already the bottom. So hey, who knows? Let's start over here with the report. I know that's what you guys came over here for. So let's start it now. So active properties right now in the month of March, at the beginning of March, is what, March 7. We got 1,382 properties. Pool homes right now, we have 723 properties, which they're starting at $309,000 all the way to $4.2 million. Now, the sweet spot on these properties, if you would have asked me, hey man, I want something decent, you're looking at somewhere between 420 to 550, 575. That's the majority of the pool homes are in that price range. Anything lower the 420, they're probably gonna be homes that, one car garage, 1,100 square feet homes, homes that probably need fix, maybe change roof and all that. And you guys know with the insurance, the way their insurance is right now, if you bought a house with a really old roof, is gonna be really difficult to find an insurance company. So that's that with the pool homes. Gulf access, I have a lot of people calling me too about Gulf access, and hey, I'm gonna let you guys know where we at on those prices. So Gulf access, you're looking at 375 properties available, which they're starting at 425 all the way up to $4.2 million. The sweet spot on those properties over here in Cape, you probably are looking at somewhere between $600,000 and up. Anything I would say less than 550, 575, it's gonna be old homes, building 1950s, 60s, 70s, and they need work, or maybe in an area really far from the river. That if you want to be going to the beach, or at least going out just to get out of the canals, you're looking at a 1 hour drive or boat ride just to get out. So that's where we add in Gulf access. I know there's a lot of people, that's why most of the people want to live over here, because of the Gulf access. But that's pretty much it, what I'm seeing. Sweet spot, $600,000 and up. New construction, so I pull up everything that is on the system for 2020 and up. So I have 2020, 2021, 2022 for new construction, new homes. Right now there is 597 properties, which they are starting at 289 all the way to 4.2 million. So on new construction properties, there's a couple of there's a couple of non-national builders out there that they're kind of liquidating some of these properties. I'm seeing some properties that are halfway done too, and they're put on the market. Those are probably properties that they're not national builders. There's people that build 3 or 4 homes a year. And they're putting in, maybe they purchase those properties, or they're starting to build those properties when prices of material were to the roof, and now they either cannot sell it or something. So there's a couple of properties of that. So if you guys are looking for properties over here in Cape Coral, or homes for sale in Cape Coral, Florida, double check always that description on the bottom, like it should be further down over here. I put over there a couple of links from homes, pool homes, land. If you're thinking about selling your property too as well, I'll put over that link so you guys could be able to check your home value. So that's that. So that's pretty much it. Closed properties for the month of February. There were 362 properties. So I mean, I think we are like 30% less than last year, and like 15%. I'm gonna show you the numbers in a minute compared to last month. So you know, I mean, we're in season right now. There's a lot of people buying. I think at the beginning of February we have almost 400 and change. Yeah, 495 since the 1st until the 16th when I pull up. I did a short video. So if you're not following me on social media, double check to your pool home realtor in Facebook, Instagram. I put up with a couple of info too as well. But I think it was 493 from February to February 16 when I did the little reel. And I mean, those are properties that went pending, so I mean, that's good. Nothing, guys. Let's come over here to the wall. Let's come over here to the computer. I want to pull up the numbers so you guys know where we at, and you know what the graph is doing and all that, and go from there. So hey, don't go. All right, guys, so let's come over here to the computer. I'm gonna share my screen really quick so you guys know where we at. Let me show you over here. This is our graph. Now, this one say 421. I did some research, and we are roughly at 417 as of today in price. So that might be, you know, maybe somebody put some other properties like over here. You're gonna see 366, and my notes we have 362. So you know, at least you guys are gonna have the that idea where we at. So if you guys could see over here, this was last year. We were let me see if I could. So here you go, guys. If you guys see, last year we were at 415 for February. Now we are what, 417. Next month, or this month that we close above 435. That means that, you know, we could still going up. And this is pretty much it. What you know, what happened in October. Of course, we close a little bit higher because we have a couple of those low-end properties getting out of the market, and that may be what, you know, what it push it further down over here, because they have some sustained damage from the hurricane. So this is where we are right now, 415. I want to show you guys what I think is going to happen, so you guys will have a little bit of perspective. So right now we are, you know, we're probably going to be over here. You see this little red dot. So probably what's going to happen in this market, we're probably going to do over here. Once we get to this point, you know, this was 470. We probably are going to be over here 430, 435, maybe 440. A lot of people probably, you know, and maybe the media is going to start saying, hey guys, you know, the market is crashing, you know, negative part. Yeah, we're going to be a little bit negative, but what's going to happen for the rest of the year? We're probably going to go like this, because, you know, this is already summertime. Maybe go a little bit more down and maintain, and we're probably gonna be able to finish the year at 2-3%, which is, that's good compared to previous years that we were at 40%, 35 or 40, 45% of increase year of the year. So this is kind of my prediction, what the market is going to be doing. So once again, I don't have no crystal ball. So, I mean, but, you know, based off the trends and all that, this is, you know, more doable. One thing though, too, that I always tell you guys that, you know, maybe May and June is gonna be the best time to buy, because that's gonna be roughly over here, and then what's happening once we get to over here, and you know, this is April, May, so this is June over here. Once we pass these 2 months, then over here is where all the media is gonna start screaming, oh, the market is crashing, oh, 10% less, yada yada. But it's because of this little hype. You know, we're kind of caught in that. You know, this is the top of the market of 2022. So probably this is where sellers might be a little bit more scared, because you know, they kind of start hearing that and all that. This is something that we have to be aware of. You know, it would be this part over here, May. And then, you know, once we pass that, we go into season, we're probably gonna be doing better. So yeah, that's what I think is gonna happen. So let me clear this up. and then start keeping with the report. So closed sales, so you guys see 366. We are 29% down compared to last year. This is last year numbers, so you see February 2022. So last year we got almost 30% less than last year, but you see over here the trend going up. I'm gonna tell you why is that in a minute. Days on the market, of course, at the beginning, February last year, we were at 6 days. Now, that went up a little bit. We are 391% up. And then, of course, our number with this is good, for sellers. That means that, we were at 35 in January, 35 days. Now we jumped, we came down at 30. So this is good for sellers. List price receive. This is, you guys know how much people are asking, offering. When I did my numbers out of this, this graph or this thing, I think we were 93% for the median and 95% for the average. So, I mean, those are still good numbers. They're not offering, above asking price, unless your property is like priced accordingly and it's pristine area, pristine location, pristine, yeah, I mean, perfect. Let's put it that way. Perfect. So new listings, we got 650. Active inventory. These have been coming up lately. I just want to emphasize that these have been come up these past couple of weeks. At the beginning of February, we were at 13 and low 1300s. So this is something we got to take in consideration, but at the same time we got to look at this too over here, the month of supply of inventory. One thing though too that we have to be aware of, like this would be 4, 5, 6. So anything below here would be seller's market. So from 0 to 4 months of supply, it's a seller's market. This over here would be your more neutral market. So that would be 4 to 6. And then anything above here, 6 and up, would be a buyer's market. So just take in consideration, most of the people always gonna start saying, hey, this is what matters. Yes or no. I think this matters the most because this is kind of a gauge give us a gauge of what the market is doing in the aspect of how many buyers are there. So if the active inventory stay low and this start going up, that means that there's less buyers out there. So let's say, for example, if this would be 6 month, then I would say, hey, listen, doesn't matter if our inventory is low compared to previous year, our month of supply, like there's no more people buying, or I mean, there's less people buying in this market. So this is something to always take in consideration and look at it, in that perspective of, whenever you guys are buying or selling. So, nothing, guys. Let me give you my little quick recap and go from there. All right, guys, so hope you guys enjoyed this. Just remember that months of supplies is our gauge. That's our really good gauge. You guys gonna start hearing a lot of people saying, a lot of other agents that doesn't understand really good the numbers. Months of supply, the inventory levels are historically low still. But if that supply, month of supply keep climbing, that means that less buyers are heading to the market. And hey, listen, it doesn't matter how many inventory, how much inventory we have in the system. If we don't have the buyers to buy, then that's nothing. And looking at the trends, what I'm seeing is we're probably gonna start seeing hitting that normal market again, which it could be that market of, hey, I need, a little bit of closing costs, or hey, I want to offer you a little bit more less, or hey, I need you guys to fix this couple of things of inspection. Once we go into a buyer's market, unfortunately for sellers, then buyers are in the driver's seat, and that's anything, above that 6 months of supply. So what I'm seeing on the market, where the market is heading, you guys know a couple of weeks ago, interest rate go up, and I think everybody everybody's just waiting for the interest rate to go down a little bit. It happened to us in January. I don't know if you guys have seen or heard all the fuss out there. Oh my God, buyers are back, you know, multiple offers. It just, there's a lot of buyers out there right now, but they're going into the market depending how interest rate go down. So where they have that inventory, I mean that interest rate that we hit almost the high five, and there's a huge, I mean there were a lot I have a couple of listings, and I mean we just went pending like that because a lot of buyers rush on the market. So for you guys sellers out there, just thinking consideration about that. Hopefully your agent is telling you what the market is doing and guide you in that aspect, because if interest rate go down, and this is something that I see though too, a lot of buyers, I mean a lot of sellers, new construction builders have increased prices, you know what, a month ago, which that's where we were, increased prices. Can you believe it? $3,000 to $10,000 went up as soon as they start seeing those buyers coming into the market, which I think is BS, but you know, whatever they do them, and you know, that's why you need to go with a real estate agent to be able to negotiate the best price. But I saw that. I saw, you know, as soon as that backed up a little bit, interest rate backed up a little bit, builders went and say, hey, you know, I say it from $3,000 to almost $10,000, depending the builder, they went up on the properties, and I could see that over here in the back end. So yeah, if you guys need any help, let me know. But yeah, that's it. Hey, listen, for you buyers out there, take in consideration or be aware of the 10-year treasury. That's gonna give you a guide of where the interest rate is gonna go. Remember, the lower that number go, the lower the interest rate goes. And then if you guys start seeing that trend go up, that means that the interest rates start to climbing. Another thing too that you always gotta look into it, and I think on the 10 is when it come out. If not the 10, on the 15 is the CPI report. That's the inflation report, and see where we at. I mean, as long as inflation come down a little bit more, we probably then start seeing those interest rates go down a little bit. If that happened now at the, you know, for the month of March, and let's say, for example, yeah, if inflation came out a little bit more soft, let's see on the 5%, or, you know, we're what, 6.4, we come out, you know, 5.9, like, you know, we be aware that interest rate might go down a little bit more, and then of course more buyers are going to rush into the system. So you got to be prepared and ready to act if, you know, that's what you guys want. If inflation keep rising, and let's say, for example, we got the opposite, you know, we're probably gonna start seeing interest rate go more up. And I think on my predictions, I'm gonna put over here in one of the videos, I say that we're probably gonna see the 8% of interest rate this year. Everybody, well, I mean, I receive phone calls from friends and some other friends of mine in the industry, and they say, oh, you're crazy, like what are you talking about? We're probably not gonna see the 7s, and look, we were on the 7s. So, you know, hey, I was right? Well, not right, because I didn't hit the 8, but we're almost getting there. Nothing, guys. As you guys see, the market's still moving. I don't think, I mean, I don't see no, let me pull this out really quick. I don't see no crash, no, the only trend that I'm seeing over here, this trend was going down, and then this is the bottom, and now we kind of start going up a little bit. So this probably will do something like this. Let me get my, we probably, you know, could start seeing this going like this a little bit, and, you know, finishing, go kind of a, you know, 2% year over year. That's good. 3%, 5% max is still good, you know, year over year. I don't know if this part over here would be our bottom, if this was a bottom. But, you know, who knows? So subscribe to the channel. I know I'm gonna put a lot of information like this for you guys, and if you guys need a real estate agent down here, just let me know. We're glad to help you. Take care, guys, and I hope to see you in the next video. Take care, man. Bye bye.